Since 2015, Airbnb has created massive distortions in the economy, and it's going to create massive crashes in the housing market and the rental market, because all this data that we're about to go through here is just going to blow your mind on how many Airbnbs are in your city. So let's take a look, and let's start off with Montreal. So Montreal, I wanted to go through this first because I kind of find it funny. We have 7,975 Airbnb listings in Montreal, so practically 88,000, sorry. And then you've got 53.2% that are unlicensed. So all this red tape that cities are putting in place to basically, Airbnbs have got to get licenses and jump through all these hoops. How many of those people are actually listening to that and are actually complying with those regulations? Barely any. And it gets even worse when you look at Toronto, and we'll look at that right now. So this is Toronto, an insane amount of Airbnbs, 20,100 Airbnbs, and look at the concentration in the downtown area. It's absolutely insane, and that is because they're mostly condo buildings. And as we know, condos are lapped up by investors, and a lot of those investors have been doing Airbnb. They've been turning to Airbnb. But the hilarious thing is, if you look at how many are unlicensed, 73.5%. I mean, that is just nuts, even worse than Montreal. So the fact is, people aren't listening to the regulations and complying with them. And the fact is, the city doesn't have the means or capacity to even enforce this. So it's just completely ridiculous, and everybody's getting away with that. So another thing that I want to show you is how recessions affect the tourism industry. And if we look at airline employees in the US, as we know, the US suffered massively in the 2008 recession, and Canada built another bubble on top of its other bubble to create this super mega bubble. So Canada's going to suffer massively like the US did. And you can see that, airline employees, it was going up from 1995 to 2000. Then we had the dot-com bust. Down it came, and there it started to go up again until 2008 hit, and then it absolutely crashed. And then look how long it took to recover. It's just insane that it took that long to recover. So obviously, the demand for airline tickets was just not as strong as back then. And it just kind of shows you how long it can sometimes take for these things to recover. And you can bet your bottom dollar that Airbnb owners, they are not looking at travel sector trends. They are not looking at possibilities of a recession. And we'll get into some more Google Trends data at the end of this video that, again, will just blow your mind, and it shows what the herd is thinking right now going forward. So that's really interesting. And now let's look by city. So Toronto, let's look at the trend at what's happened with Airbnb since 2020. So Toronto, as we know, over 20,000 Airbnbs, just uncomprehendable, isn't it? I mean, you just can't comprehend it. It's crazy. So you basically had from 2020 and even through 2021, Airbnb growth went down, which is what you would expect during a time of economic uncertainty, and when travel demand essentially collapsed in 2020, you saw Airbnbs go down, and a lot of those Airbnbs would have made their way onto the long-term rental market, some onto the housing market, which is an interesting note. So, that happened, and it happened in most of the cities too. So what's interesting to me is during 2022, you saw Airbnb inventory consistently go up. And this wasn't just a trend in Toronto, as we'll go through in other cities. This happened in other cities too. So we saw a lot of people. I think what happened was you saw a lot of people who had variable rate mortgages that, essentially weren't getting enough money from their rent. They needed to make more money. So they thought, you know what, we're going to flip it to an Airbnb. And they flipped it over to an Airbnb to make more money. Little did they realize that there was kind of this post-pandemic travel boom that happened in 2022. And now we've got the Airbnb CEO, even he is coming out and saying, that pandemic travel boom, it's over. You're going to see average daily rates trend down for the rest of this year. So that's obviously a sign that something isn't right in the economy, and obviously a sign that all that pent up travel is kind of making its way out of the works, and it's kind of getting it's kind of gone now. So it's really interesting that you saw this happen in every city. Now 20,000 Airbnbs is just insane. It's really insane to even comprehend that. So, and then you got Montreal here. You saw the same thing happen. 2020, down it came. And then in 2022, up it came. So you saw this happen, not just in Toronto, it happened in most cities. And then if we switch over now to Montreal and take a look at the housing supply so we can compare it, you'll notice that there was 16,456 active listings in April 2023, says right there. So if we flip back now to Montreal on AirDNA, you've got 12,000 active listings in Montreal. So, that is a huge amount of the total inventory. If a lot of those come to market at the wrong time, then what's that going to mean for the housing market? What's that going to mean for the rental market? And you can just see where I'm going with this, can't you? It's gonna create this extra layer which will add to pressure on rents going down, pressure on housing prices going down as well. It's just kind of crazy to me that nobody's seeing this. This is kind of the elephant in the room. A lot of people don't want to talk about this. I don't hear many people talking about Airbnb, to be honest. Let's talk about Calgary. Calgary's seen a lot of growth in Airbnb. So obviously 2020, it came down just like everywhere else. Then in 2022, you saw it going up massively. So, Calgary right now, it has 5,300 active Airbnb listings, which is just an insane amount. But if we go to the Calgary housing market, it's really interesting because inventory is really tight in Calgary right now. You got 3,200 units of inventory right now, and you have more Airbnbs than inventory in the housing market. And it's kind of, you have to think, if you're in a city where inventory is really tight, you have to really think that through on what is going on with the dynamic there, because you've got a lot of people that are stuck in negative amortization. You've got a lot of people that are underwater on their home, so they can't sell, and they're not going to sell until they're forced onto the market. So those places like Calgary are risking a massive spike in inventory when you get all the distressed sellers come to market at the same time, which could possibly happen. And not only that, in Calgary, you now have this extra layer, which is the sort of migration boom that happened last year, probably going to continue into this year because the herd just really isn't seeing about the recession, which we'll get onto at the end of this video. And you'll see that in the trends. But, you've just got to think through what's going to happen with the migration boom if you're in a place like even Halifax, Nova Scotia, which has seen the same thing. A lot of people moving out there, cheaper cost of living. Now, a lot of us would think, oh, these are the people with $1 million houses that are selling them and moving, and that's not the case. These are the people that can't afford to buy or have been priced out of markets in BC and Ontario, and they're moving to these places to buy. They have a ton of FOMO and they want to buy. So that's another factor which is driving down inventory. But you've just got to think what's going to happen in a recession. And, Calgary, the migration statistics don't lie. I've done videos on this, and you can see clearly before recessions, you see a boom in migration. It's just kind of crazy, and it's happened this time as well. It's been one of the most extreme because of the government coming out with this propaganda campaign, which was always a weird one to me because I don't think any taxpayer would like their money being used to invite people to come over to drive up the cost of living for the taxpayers here. It makes no sense, and it has driven rents up. It's driven housing prices up since they started that campaign, but it's just added more risk now to the downside when you have the economy go south, which it will. I mean, Calgary, highest unemployment rate in Canada right now, but it's the place that most people are coming because they think everything's fine, as we'll show at the end of this. So really interesting. Let's flip over now, look at Vancouver. So Vancouver saw the same trend again, guys. It came down 2020. as we would expect. And then in 2022, inventories come up, and now you got around 5,700 rentals. And again, like Toronto, look where the concentration is. They're all condominiums, and they're all downtown Vancouver. So you know what's going on there when it comes to condos, and probably what's driven a good chunk of condo buyers. A good chunk of them will be people who bought them to do Airbnbs, people who flipped long-term rentals to the Airbnb market, but they're just really not following the trends. This is all bubble mentality. People just do not operate these Airbnbs as a business. They're not looking into the trend. They don't even realize what they are, which is essentially a hotel manager. You know, they're not in touch with the trends at all. I can tell you that. And, you know, as you guys know, I've been to Mexico. I've seen these people. I've been to the meetups in different parts of Mexico. And this is really your dumb money. This is the dumb money. It's the dumbest money that goes into Airbnb. And a lot of these people, they don't even make much money on it because they have people stealing stuff. You know, the stories I heard just would blow your mind. It would make you think, why on earth would anybody do it? But if they're desperate to make money, they're going to do it. Let's take a look at Ottawa. Again, concentration obviously towards the downtown there, but you can see Airbnb growth kind of been flat there, but it came down in 2020 substantially, about 30%, flattened out. It did go up in 2022, but not substantially, and then came down in the last quarter, and now it's trending up in Q1, and we're just waiting for the Q2 data. And, you know, what I'm going to do is I'm going to try and reach out to somebody from AirDNA because they have a ton of data. Their platform is really, really good. This isn't a promotion for their platform, but it's insanely expensive to subscribe to the data. So I'm going to get in touch with someone from AirDNA. I'm going to see if they can come on to the channel and I can actually talk to them about the trends that they're seeing, because I think that would be incredibly insightful for all of us to speak to somebody with this amount of data behind them, such as AirDNA. So I'm definitely going to do that and see if they want to come on. So interesting. Now, this is really interesting, guys, and well done if you got to this point, because this is really a golden nugget. So we're talking about Google Trends data now. So the search term recession, obviously, if people are fearful of a recession, they're going to be searching for it, aren't they? And this is what's really interesting to me, is the divergence between what the herd is doing and what the herd is thinking versus what the banks are doing, what the smart money is doing in the bond market. But they're doing the opposite things. One is predicting like a depression, and the other, they're like soft landing, no landing. You see that exactly with the trends. So, you know, the herd aren't worried about a recession right now. Hence why, you know, we've seen a strong spring housing market here in Canada. But the yield curve, insanely concerned. And the fact is, if you adjust the GDP numbers for the 1980 CPI, we're already in a recession. In fact, we barely got out of the recession in 2020. It's just all that stimulus money and the savings that people have from the pandemic just distorted everything. They distorted everything, and people are drawing down those savings. They're going down, 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 down. So, you know, not good at all. So really interesting if you look at this, and this is going to blow your mind what I'm going to show you right now. So if you look at where recession peaked, as in the search, the last peak that we saw was in October. It was around 9th to the 15th. So that's an interesting date. So remember that, October 9th to the 15th, because I'll show you something with the bond market that will just blow your mind. So last year, there was really a fear with that there was going to be a recession. If you look at the Google Trends data, you can obviously see that. Now, it is elevated compared to the past still, but if you look at it, it's much, much lower than it was last year. So yes, a significant portion are still worried about a recession, but the herd, the majority, the 70 to 80% of the population, they are not worried about a recession right now. And don't we see that out there? I see it everywhere. It's the return to normal year that we have right now. And we just had a banking crisis in the US. A major liquidity crisis happened in the entire financial system that affected global bond markets. And nobody even talks about it. It's all, I told you this, guys. I said everything will go quiet in the summer, and that's exactly what's happening. Everyone thought that banking crisis was just going to be the thing that blew up everything and it would just continue. But I said everything would go quiet in the summer so the big bankers can head off to the Hamptons, enjoy their summer, and then it's all probably going to blow up in the fall and in the winter of this year. So we'll see about that. That's my prediction on that, and we'll see if it comes to fruition. So remember, October 15th, and then we're going to take a look at the 5-year bond yield. But you can see here, bond yields peaked October 16th. And look, they haven't been back since. And we had that recession term peaking, as you saw there in the data on Google Trends. That peaked October 9th to 15th. Don't you find that unbelievable? I find it absolutely crazy. So, the herd is thinking the complete opposite to the bond market, which is the smart money. This is the big money. I wouldn't necessarily call it the smart money, actually. That's probably the wrong term to use. It's the big money. But it's the banks, essentially. If you want inside information, look at the yield curve. Believe in the yield curve, because who is betting that interest rates are going to come down? It's the banks, because they know what's coming. They know what's coming. The government doesn't know, but they know. And the thing is, the chances are by the end of this year, we're going to be in a recession. Even if GDP numbers aren't saying it, people are going to be feeling it massively. Inflation has affected the poorest, and it's starting to affect the middle class, and then it will affect the richest people and the wealthy people in society as well. And typically the wealthy people, they're out there at the last stage, like right now, and they're still keeping the economy going because they think everything's okay. They're the last affected, so they make the worst financial decisions generally at the end of the cycle, and that's where you see a lot of the dumb money sloshing around, which is definitely what we saw in 2022. And with the Airbnb situation, even in other countries like Mexico, where I went, all over Mexico, just mind-boggling. So anyways, if you've enjoyed this video, guys, you might like that video there. You might also like that video there, and I will see you in the next one. Take care of yourselves, guys. Bye-bye.